So I'm wearing high heels to try and level the playing field here, but apparently I have a little more work to do in that department. So thank you, AIM. We're going to do a little bit of a zoom in and look at what does community capital really look like, right? Because it can be hard to see sometimes. It's spread out. It's below the surface. And we've had a pretty unique view, Arno and I, over the past year with this platform, Investuble, that Amy mentioned. And so we've aggregated community-based offerings across, ones that are open to all investors. And our goal in doing this is to make it really easy for people to discover opportunities to invest in their communities, no matter the underlying exemption, and whether their community is the place that they live or a community of interest. So we're going to share with you a little bit of some of the lessons that we learned and take you on a little tour of our first 500 offerings that have been featured on this site, which is as of like mid to early August. And the messages I think that we want to share are that community capital is happening, it's diverse, and the trend is really encouraging. Community capital is really tilting towards social justice. So we're just going to give you some highlights, but we invite you to follow up with us. We'll both be here for the full conference, and please check it out for yourself at investibule.co. So first of all, we take a really broad view of community capital, crossing regulations, funding types, and platforms. So we include offerings that are conducted under the federal Jobs Act regime, which you've heard about, so regulation crowdfunding, some regulation A, as well as intrastate offerings, the things that are happening only within states, direct public offerings, and a few other things we throw in there.
So I'm an investor, and so from an investor perspective, these community capital offerings look at me in different phases. So we noticed that more than half of them actually loan-based, and that goes from interest-free loans up to revenue share loans. And then we have in equity, and this is a little bit more than half, and less than half, that may surprise some, is actually equity that goes from convertible notes to straight out valued round. But we should also not forget that some community capital comes in form of prepay. That's actually where you get the payback in products and services. And some of them are reward campaigns, which is the traditional crowdfunding, but they actually have substantial payback in their local investment campaigns. So this was an interesting split for us to see that these forms exist, and they actually, where do you make those investments? You actually go to one of those about 30 different sites that we have been aggregating.
And growing.
Yeah, and probably more coming, and some of them are in the room here, of course. Hedge Oregon, Milk Money, Small Change, and who am I forgetting?
Next Seed.
Next Seed, yeah. So we have a few here. Anybody forgetting? So there are 30 platforms out there. So we are in this like nice, charming stage of this new community capital arena taking off. But it also can be a little bit cumbersome at times. Just imagine if the incumbent economies with the public stock markets, you go to one side and put your money into Apple because you're so obsessed with the iPhone that you can't help yourself. And then for some strange reason, you want to invest in General Electric, which I don't know why you would, but then you have to go to a different website and make your investment there. This is where we are right now in community capital. So we still have some work cut out there. So this is where they are. Now let's take a look, what type of businesses are they? And this is really interesting. So the size of the circles that you see is the number of businesses that we are represented in the Community Capital 500. So the biggest is food and beverage. Yay! So that's just where community is happening. And you see it's like middle of the road in terms of the size of the investment. So the average investment in food and beverage is about 100K, and it's somewhere between 100 and 200 investors per opportunity. No surprise, tech is in the upper right corner. This is like where the traditional VC world, of course, has almost all of their investments, but here it's not such a big circle. But the beautiful thing is when you look down here, you actually see that the categories that have lower investments, but hey, clothing, other retail, or even pets actually find investments through community capital that probably would be too small for any other investment opportunities. And here we actually see them being presented. And the real fun of Amy and us and I doing this, we're not just doing the bean counting, we actually get to see it, or we looked at all the 500 and we had like so much fun with it. And so we see anything from grass-fed farmers up the coast here, or the other grass, and we see high-speed telecom, locally owned, co-op, yeah, or if you want to get even higher, then you can, we even saw jetpacks being as an investment opportunity. So, and they got funded, by the way. So it's a really nice ride and really nice journey when you see what's actually happening in community investments. So where is it happening? That was like super interesting. Geographically, we see a really wide variety. So the dots are where community investments are happening. And it's all over the map. And not surprisingly, we see really concentrations in California and then New York, the usual suspects. And there are a lot of white spaces in between. But we also see some nice, more dots probably than traditional venture capital would have, or bank lending in between, which is encouraging. And we even see some nice concentration happening in the southeast here.
Yeah, so speaking of the Southeast, we'll give just a few examples. This is Muscle Shoals, Alabama. And this is a cool company called Scrap Connection. They are like a B2B marketplace for the recycling industry. And I mean, look at those numbers. If you can, raise almost $1 million and rustle up more than 1,000 investors in Alabama, I think there's hope for us all. I'm kind of slipping into a Southern accent for some reason. Okay. Just another geographically diverse example, Captain Cook, Hawaii, right? This is a really nice cider company, organic cider company. They make cider from the very abundant, often fallen fruit in Hawaii, and they were able to raise money to expand into new categories and open a production facility through community capital. So this is the money slide, right? Like let's get down to business here. The fact is, capital is flowing and people are getting funded. Across these 500 offerings that we've tracked, they've raised in total $52 million from more than 72,000 investors. So as Michael, I think, mentioned earlier, it's not, it's a drop in the bucket compared to venture capital and some other capital sources, but that's not bad, right? We're on our way. And you'll see 12% of them are still ongoing, so that number may go up, and less than 20% fell short of their goal. So they're doing much better than they would be doing out there in the world of conventional finance. And the really exciting thing to see is that community capital really seems to be reversing the bias that exists in venture capital and even bank lending, right? I mean, women and minorities are still underrepresented in our sample, but they're kicking butt, right? Women are about, women-led, women-owned firms made up about a quarter of the campaigns that we looked at. And as you can see, they're way outperforming the average. And minority-founded businesses are even less represented, but they're still making a good showing, and they outperform as well. So, it's back to Amy's definition of community capital, right? Is communities investing in themselves that had the communities that had been left behind before. So I think we're starting to see that. And if anything happens when you take away the gatekeepers, right, and you let people and communities decide who they want to invest in. So as Arno and I like to say, if we want to change who gets funded, we need to change who does the funding. So community capital is really starting to fulfill that promise, and we want to mention just a few examples here. This is Lynn Johnson and Allison Kinney from Oakland. They run a really great program around girls' empowerment, summer camp, and other programs, and they were able to raise money to expand that. And then in Detroit, this is Century Partners, a group of developers that are rehabbing abandoned homes in some of the outer rings of Detroit, right? Not where the Intuit guy is, building everything. And they're allowing the community and investors to participate in the revival of Detroit. And they're currently raising money on a platform called Rabble through a Regulation A offering. Oh, and this one has to be, I think, my favorite. It's Native American Natural Foods. This is a company that was started by Native Americans on the Pine Ridge Reservation in South Dakota, and they make something called tonka bars, which are bison beef cured with fruit, which is an ancient recipe from the tribe. And their mission with this company is to restore the buffalo to the Great Plains, and along with it, the culture and the livelihoods of the Lakota people that live there. So it's a really powerful story. We wrote about it on Locavesting, but this offering is in progress right now on WeFunder if you want to check that out.
Yeah, the close-ups of some of those community capital opportunities always give me a little bit of a goosebump. So this was like a short journey through the Community Capital 500, and we had 500 right now, and we will report back how are the 500 doing. But let's look at where this could be going. I think the first clear point is we shouldn't be reporting about 500 here. We should be reporting about 10,000, and we hope to do so pretty soon. So 500, while this is very encouraging and heartening as examples, we need to represent the bottom half of the economy with way more examples in the sample. So we will hopefully report back with 10,000, and we're just at the very, very beginning in this, what Michael said, where we're still at the bottom of this movement. But as somebody smarter than me said, people tend to overestimate the amount of change that will happen in 2 years, and they tend to completely underestimate the change that happens in 10 years. And I think that's where ComCap is at that early stage right now, and we will see this happening. So what would it mean if we had 10,000?
Right, and it may sound outlandish, right, to have half of our portfolios and retirement savings invested in the bottom half of the economy or the Main Street economy, but I mean, as Michael Schumann did a really good job this morning pointing out, small local businesses are half the economy, right? So why is that so crazy? Women are half the population. Why is that so crazy? People of color, communities of color are some of the fastest growing entrepreneurial segments and a vibrant part of our economy and our culture. Why should that be so crazy? So we do think, the more that we move money into this economy and our communities, I think the more we create wealth in those economies and maybe, just maybe, begin to chip away a little bit at the yawning wealth gap we have in this country.
Very true. So as we said, our main learnings just in the early stage was, number one, it's a wider variety than we thought, geographically, types of businesses, demographics of the founders, and that diversity, I think the arc of that diversity is bending in the right direction, and we have so much more, of course, to share with you. You can check it out on investuble.co yourself, but you can also talk to us because we're just showing you the highlights. So what would it mean if community investing would be happening widely? It would happen because the communities do the underwriting. And we basically have the competence to do the underwriting, and we hope that then institutional investors will join us in our underwriting competence and match our funding and our underwriting with putting more capital in also underserved communities that currently don't have the capital to take care of their own.
So finally, we're all investors, right? But we don't always realize that. And I think the people here know, or at least the people that appeared in Amy's video know, right? We're investors, but how do we spread this message more broadly and inspire people to act? A skeptical member of our community has said to me recently, but you're trying to change people's behaviors. That's really hard. And it is hard, but I think that's why we're all here, gathered in Monterey, to talk about some of these issues and challenges. So how do we raise awareness? How do we make this normal behavior? Because it's not really investing in money that we're really talking about. We're talking about building a better world through stronger communities, and it just so happens that capital is a big part of that. So the message is empowering, and we look forward to discussing all of these things with everyone here over the next few days and beyond. So we will talk to you more. Thank you.